What's up, beautiful people? I am back with more fresh news from the crypto space. This is Romeo from Marketing in Crypto, and you are watching Crypto Rundowns. As always, we'll be covering three biggest news of the week. First of all, PayPal has launched a new stablecoin. We'll talk about that. At number 2, we are covering Bitcoin ETFs. There is something huge coming, and I can't wait to share that with you. And number 3, Russia has started a trial program for CBDCs with 13 banks. So what's up with that? Let's go one by one. First of all, let's talk about PayPal. Now, we all know what PayPal is. They have been doing for the last 20 odd years in the financial and payment ecosystem. Now they have shown interest in basically launching a new stablecoin. They are calling it the PYSD from PayPal. Now, so far what we know is that Paxos is backing this stablecoin. Paxos has already backed a BUSD. I think they faced some complications with BUSD in the US, but we are going to actually see what sort of regulatory problems PayPal faces with their new stablecoins. But let's talk about the timing. If you have been following Nasdaq for the last year, PayPal has been one of the worst performing assets on Nasdaq for the last 12 months. In fact, they have had a slump of 33% in the last 12 months. PayPal is definitely hoping that this stablecoin is going to save them. And the question is, can it? Well, obviously, with the market in the US right now and there are regulatory concerns, we cannot be sure what's the SEC going to do with this. But so far, what we are seeing is that this stablecoin is another very centralized stablecoin that is pretty much going to be stuck within the PayPal's ecosystem. If you are in the US, you know that you can use PayPal's ecosystem to trade some of the coins. I think they have Bitcoin, Ethereum, and some of the top altcoins. So what you can do is directly convert your USD to PYSD within the PayPal's ecosystem, and you can convert back to USD, which is something that Tether doesn't really have, or USDC doesn't really have, at least not available worldwide. So if you have, let's say, a certain amount of PYSD in your wallet, in your PayPal account, what you can do is directly convert it into USD fiat. So this is definitely a very easy way to on-ramp, and with everything coming and the traditional finance people coming on crypto, I think this is a positive change, I will say. And also, PayPal has got a $400 million market share in the payments ecosystem within US. So yeah, definitely we are looking at some positive signals in terms of crypto adoption. So let's talk about market share. So as you already know, like Tether controls the vast majority of the entire stablecoin market. I think right now it has around 65% of control. 65% of all the stablecoin transactions goes through USDT. Another 20% is controlled by USDC. Then we have got BUSD at I think 2% or something. And the only, I think, crypto-backed stablecoin on the chart is DAI. From MakerDAO, it's at 2%. I think the question is, can PayPal take back some of the market shares from Tether, or can it hit USDC, for example, really hard and get 10%, 15% of the market share? Either way, I think this is a positive outlook for the entire crypto scenario. It doesn't really matter what these companies were doing previously. As many traditional finance companies gets on crypto, the more they are going to mainstream the adoption, and that's exactly what we are looking at. Well, obviously we have differences in terms of philosophy and in terms of entire infrastructure of the Web 2 and Web 3. But right now, if Web 2 companies are coming into Web 3, we should be welcoming them with open arms. That's what my take is. And at the same time, I think it's a positive sign that if traditional companies like PayPal is at least willing to come and adopt Web3 assets, that means that the regulatory concerns have at least been lowered to some extent, that these companies are feeling comfortable to make this jump. I am actually looking forward to see what other companies follows PayPal. Okay, so that's pretty much it about PayPal. Moving on to ETFs. Now, what's happening with Bitcoin ETFs? So as we already know, there are around 9 institutional investors that have already applied for Bitcoin ETFs to the SEC. It was led by BlackRock, then Invesco, and a bunch of other companies got on board, and all of them filed for Bitcoin ETF applications. Now, what's happening with that? A lot of people doesn't know this, but even before BlackRock actually filed for the Bitcoin ETF, there was the Cathy Wood's ARK Investment actually filed for the Bitcoin ETF back in I think March or April, or around that time. They filed for this application. So with that application, there is a soft deadline of 13th August. By then, SEC needs to respond something. The industry is not really expecting a yes or a no. What the SEC will most likely do is delay it. Now, how much more time the SEC will need? So in terms of the ETF regulations, the SEC can take as much as 240 days to give a definitive yes or no to any ETF applications. That means we have got around a 6-month horizon before any of the ETFs actually gets approved or denied. Now recently a report came out. The Galaxy Digital CEO said to his investors in an earnings call that he has had inside knowledge from both Invesco, with which Galaxy is a partner, and they have also got updates from BlackRock that they are very bullish that the SEC is going to approve the Bitcoin ETFs. And also Kathy Wood, the CEO of ARK Investment, is also saying that if one of the ETFs gets approved, then there is a very high likelihood that all of them, or at least a bunch of them, will get approved. Because essentially all of these Bitcoin ETF applications are very identical. Like if you look at BlackRock and Invesco's ETF application files, you will see that they are basically asking for the same thing. Even they have all of them have collectively selected Coinbase as the custodian of all the funds that they are going to collect and basically convert it into the ETFs. So far, what we are looking at is a 6-month horizon. That means we are going to get an answer by January or at the latest March of 2024. However, as I already said, there is a very high likelihood that this will get approved, and once it gets approved by March or April of 2024, and we also get the Bitcoin halving by 2024 April, we are going to be looking at another bull rally, and it's going to be a strong one. So let's talk about why this ETF really matters. Like, what exactly is an ETF, and why do this big hedge funds and money managers are actually applying for this ETF? So ETF stands for exchange traded funds. Now exchange traded funds are, let's say, somewhat like a mutual fund, but it's not really a mutual fund. What it is basically, take any asset. For example, you have got, let's say, gold. Now gold is a physical asset. Now what happens if you want to trade this physical asset? Now you can trade it with commodity bonds and stuff like that. You can trade it through derivatives, or what you can do is you can trade it through ETFs. If you want to issue an ETF against gold, which already exists, what you will do is you will hold enough amount of gold. Let's say you hold, I don't know, 500 tons of gold. So what you will do is you will say that, okay, I have got this 500 tons of gold. Now depending on its price fluctuation, if it's going up or down, I will issue this ETF, which you can invest at the current market price of gold. Instead of directly holding the gold, you will hold this ETF, and if the gold's price appreciate, you will make a profit. If the gold's price depreciate, you will be basically booking a loss. That's pretty much how it works. So in layman's term, if you want exposure to an asset without holding an asset, you buy an ETF. That's as simple as it. So how does it make sense for Bitcoin? Like, if you want to hold Bitcoin without holding Bitcoin, like you don't want to go through a centralized or decentralized exchange, you want to keep the whole thing within your traditional finance space. And in that case, what you will do is you will go to someone who already holds a massive amounts of Bitcoin. In this case, it will be BlackRock. And what BlackRock will do is BlackRock will issue bonds of papers that basically certifies that we hold this much amount of Bitcoin, and against this we are issuing this paper, basically this paper asset that you can buy without necessarily having to go through all the crypto problems that otherwise you will need to go through. If you're going through, let's say, Binance, you will have to go through the whole KYC process. Then you are actually holding cryptocurrency, and there are really no way to convert crypto into fiats other than selling the crypto. So ETF basically gets rid of all of it. So the question is, like, how does this affect the crypto industry in general? So it affects in two ways primarily. One is more definitive, and the second one is more speculative. So the first way is traditional investors will get much more excited. Like, if you talk to a traditional finance people, they don't really want to leave their own lane and learn something new. Okay, if you tell them that the same way they buy stocks or bonds is the same way they can buy Bitcoin, there will be a very high likelihood that they will start, or at least they will feel comfortable to have some exposure to Bitcoin. So this is what you can call mainstream adoption of Bitcoin. And the second reason why this is important to the crypto community is somewhat speculative. What people are speculating is that once a lot of institutional investors starts buying Bitcoin, the price will soar. And this is a very likely outcome that I really don't challenge. But again, this is speculative. Like, you can't really say that if Bitcoin ETF gets approved, the Bitcoin will go 2x or 3x from the current price level. I'm not really saying that. So now let's talk about Russia. Russia has launched a CBDC trial. They have partnered with 13 of the Russian banks, and they are basically rolling out CBDCs in 11 cities. Now, it's a very, very bad thing if you don't know what CBDCs are. CBDCs are basically central bank digital currencies. What it does is take the blockchain and throws out everything that is good about it. So with blockchain, you get decentralization, you get immutability, you get a high standard for security. And what CBDC does they basically centralizes the blockchain. Now, what happens with the centralized blockchain? A centralized blockchain is a very, very powerful weapon that you don't really want to be used against you. What CBDCs can do is basically give power to central governments and banks, or basically any centralized entity, to track your financial details, like every financial history, your background, all of your records, how much do you earn, what are you spending on. They can track everything. And not only that, they can freeze your funds, they can block your streams of incomes, they can do whatever the hell they really want. So why are governments really interested in it? Like, there are no real reasons to start a CBDC program when you already can just legalize cryptocurrencies. If you don't believe in the other cryptocurrencies that are, let's say, more volatile, you can always believe in Bitcoin. And so Bitcoin already solves the problem that CBDC is trying to solve, and CBDC is going to make it worse. So let's say something like, think of a very oppressive state, and I won't name any states, but in that state, if you talk about things that the government doesn't really want you to talk about, they will flag you, then they will find your bank accounts, then they will see how much CBDC you have, and they will simply block it. Like, take a look at what happened at Canada with the whole farmers protest. Like, everyone who gave money through GoFundMe and other ways, the Canadian government just blocked these people's bank accounts, and that's horrible. And that's exactly what's going to happen more and more once this whole CBDC thing gets launched. And what's more unfortunate about it is that a lot of countries are actually trying at least sort of a trial program. Like, China already has it, now Russia has it. My country, India, is doing some stuff with it. There are some African countries, there are some South American countries. All of them are basically flirting with this concept of CBDC. And I hope that there are people with good sense who are going to talk sense to the people who are actually interested in it. Because if this whole nonsense of CBDC gets going and it's really approved in the financial markets, what's going to come next is going to be horrible. So yeah, if you don't know what CBDCs are, I really want you to learn about it. I'm going to link a few really good sources that you can read and learn about CBDCs from. So first of all, learn about it and then start speaking against it, because our financial futures will be at stake if this CBDC thing gets going. Okay, so that's about it. Thank you for watching this whole video. If you're watching it on YouTube, don't forget to like and subscribe. If you're watching it on Twitter, follow me and stuff. Like it, share it if you like it, retweet, and all the other stuff. And I will see you again next week. Ciao.